What's up there, everybody? This is Casper Trader back here with another video today. And in today's video, we'll be doing a portfolio review, currently week 23 of our $2,000 to $100,000 challenge on Robinhood. And I've got to say, so far, we're doing pretty well. We've gone from $2,000 up to $9,000 so far, and that's through depositing money, as well as the portfolio just growing in and of itself. So I'm excited to show you guys how the last week has went, and my future plans for the upcoming week, including the stocks and options I'm looking to potentially buy and sell. So before we get into the video, I'd really appreciate you guys could smash that like button below and subscribe to the YouTube channel if you guys have not yet. I'd really appreciate it a ton. Alright guys, so if we take a look at our portfolio, we're currently at $9,000, and in the last week, we're up only 0.5%, but hey, as long as we're in the profit, I'm not complaining. And then if we take a look in the last month, we're up 7.7%, which is also pretty good, $644. In the last 3 months, we're up around $1,160, around 14.9%. And I wish these were all profits, but once we get to the all, you'll see that it's not all profits. But in the last year, we're still up $1,000, so 12%. But overall, we're up. We're not a lot though. We're not up a lot though. But we're still up 1.7%, which is around $150. So I'm still very grateful that we've been able to reach the point of break even and then surpass that. And now we're currently profiting from our Robinhood portfolio. We've been losing money ever since like the beginning of 2019. So we've been losing money until like April so almost a year and a half. We've been just straight up losing money. And then once I started to adopt a more growth long-term strategy approach for my portfolio, then we've been able to make it back and we're in the profit. So yeah, that's how our portfolio is looking. And if we take a look, I'm currently holding some TNA puts that I sold, and I'm currently just doing this week after week after week, and every week I'm making in between, I think, like $50 and $80. For example, in the last week from just TNA, I calculated it, we made so on this one we made 5, and on the previous one we made, I think it was $59. Yeah, $59. So 5 plus 59, we got like $60 plus that we made this week just from selling TNA puts. And so that's pretty nice. I'm just looking to keep on doing this over and over and over again until we're assigned. And then once we're assigned, I'll start selling some calls, some covered calls, which I've never done before. So I don't know how that'll go, but I'm excited to see how that will work. But so far, I'm still happy about making these $50 to $70, $50 to $80 every week just from selling puts on TNA. So that's what's going on with TNA. And overall, our portfolio is looking pretty similar, but I did exit out of one position, and there's another one that I really want to get out of as soon as possible, but one of them is causing me trouble. So one of them that I did leave, and this one I kind of went in for a swing trade position, and that was Foot Locker. I saw that this chart had a pretty consistent pattern for like the last 3 months plus, where it had a little bounce down, and then it just bounced back up. Hit the support, bounce back up. Hit the support, bounce back up. This countless times. So I bought in near the low. I think I bought in somewhere around this area. It wasn't exactly the lowest point, but I bought on somewhere here. And then I sold at 30.5. I think it was 30.5 I sold. So boom, we made like, when I was looking at the percentages on Robinhood, I think it was anywhere from 7 to 9%. So let's say 8%, just swinging this over like a week or a week and a half. So that's not bad. I'm always looking to make some profits, no matter if it's short term or long term. Of course, I'm focusing on more long term, but this was definitely not a bad play. It's better than just keeping your money in cash, because in the meantime, we made like anywhere from $15 to $25 off this. So yeah, that's pretty good. We did make some money off of selling our Foot Locker. But one of the stocks that we're really looking to get rid of is Uber. So recently, Uber has had some problems, especially in California, where they're trying to have the Uber riders as full-time employees, but Uber doesn't really want that, and I don't think anyone really wants that, because if you sign up for Uber to drive people, you kind of want to do it in your spare time. You don't want to like be given a specific schedule and time that you want to do this kind of side gig thing. So I think that if California is doing this, that who knows, maybe some other big states or even cities may implement a similar kind of law for Uber and Lyft drivers. So I really see this as not a very positive thing for Uber. And overall, my belief in this company has slowly gone down. Of course, I still am a believer in this company, but I just see that my money could be better put somewhere else, if you could understand what I'm saying. And my plan with this stock is basically to get out, hopefully if the pattern continues and it doesn't break the support. The stock is currently at like the support area where it's bounced multiple times before, around the $29 to $30 area. That's where it is right now. So hopefully if it does bounce back up, I'll even be happy to sell at a small loss, maybe. So I bought it at 34.7. If I sell it at 33, I'll be a happy man. I'll probably lose like, what is that? We have 8 shares and then we'll lose like $1.70 on them. That's not much. We'll just lose like 12, 14 bucks. So yeah, I'm definitely looking to get rid of Uber. It's not that I don't believe in the company. I just feel like my money could be put better elsewhere. Like it could make me more money somewhere else. So that being said, what kind of stocks do I think that my money could be better put into? So that's where I'm going to be explaining the kind of stocks that I'm looking to potentially buy in the next week. So overall, I don't know how much cash we have, but we definitely don't have much. I think we have, around 100. No, actually I spent 150 on VUG. So we have like 30 bucks cash. And what I'm looking to do is buy more into Apple. That's one of the companies that I feel like my money could be well put into. I know that it's currently at a really high price, but that's what we've been all saying probably for the last year. This stock just keeps destroying expectations. Like I personally thought that, okay, maybe it's going to slow down the growth a little bit, maybe have a little sell-off like it did here sometime soon. But no, it just keeps climbing up and up and up and up. I feel like it's a safe place to put your money and expect a lot of growth. And especially with the stock split coming, I don't see this stock ever going down significantly, where if you're a long-term investor that you would lose money, because everyone who gets into the stock market, the first stock on their mind is either Apple or Amazon, or maybe Tesla nowadays. But Apple is probably one of the first stocks on their mind that they're going to go ahead and purchase. And once the stock does split, they're going to be able to buy a share of Apple for like $115, which almost everyone getting into investing can afford, unless you're getting in with like 100. But majority of people, if they're putting like, hey, I have $1,000, I want to start investing, Apple's definitely going to be one of their picks. And I almost guarantee you that for the majority of people. So I just see this stock as consistently advancing. And a lot of people will also be purchasing their stock because it's just one of those stocks that everyone thinks, oh, I use their products every day, might as well invest in it. It's kind of like that beginner stock. And there's more and more people getting to the stock market every day, and the stock market's always going to be here. So I think that just enough elaborating, but I personally just see a lot of potential in Apple. Maybe it's not the fastest growing stock out there, even though it does grow really, really fast. I just see that it's a safe place to put your money for the long term. So that's what I'm looking to do with Apple. Facebook, we're doing good on it, but I'm personally not looking to add any more. We're up $190 on it. Microsoft, we're also doing pretty well. I think I have enough in this stock. Probably not looking to buy any more. I think I added like 20 bucks into this stock in the last week. But overall, we're up still like $92 or 16%. It's an alright stock. I mean, I still really like this stock, but between this and Apple, I think that they're both great stocks. But right now, I feel like I could put more money into Apple, because obviously I have a little bit less in Apple than I have in Microsoft. But if we take a look, we are also making some really good profits, and I'm pretty surprised that we've been able to make this kind of money from Tesla. And that's just with a tiny fractional share. Well, tiny, call it what you want, but in the next 2 weeks or so, we're going to have this as a full share of Tesla, so that's awesome. But right now we have around $495 invested into Tesla. I'm slowly looking to add on to this position, but not at this price. When I'm buying stock, I wanted to get it at a good deal. So 2 weeks ago, I think, or 2 weeks ago, yeah. 2 weeks ago when the stock was dipping down, like right here, as you can see, this is the area that I was buying Tesla. I always want to buy a stock when it's dipping down, no matter if it's a 1% dip or a 10% dip. I just want to get it in on a dip because I feel like I'm getting a good deal. It's like you're buying something on sale. Most people don't buy something if it's not on sale. So if there's little sale, I mean, I feel like you're getting a little bit of a better deal, just that tiny bit. And so far, we're doing pretty good with Tesla. We're up $92 or 22%. And all I'm doing with the stock is right now holding, and I'm probably not going to let go of this stock for the next few years. If something, then just keep adding on and adding on. But hopefully, we're going to be able to buy it in on maybe another dip sometime soon and just keep adding on to our position. So yeah, that's what we've got with Tesla. Illumina, this stock is not doing too well. I went way overboard. I should have bought like one stock max, but I don't know what was going through my head. Honestly, I have no idea what was going through my head. We're down around $77 on this stock. We're on 9.7%. I see this company as a good company in the long term, but that may be like 1 to 2 years, or even more, that I see that it's going to really start prospering, even though it is kind of prospering right now. But I feel like I put in too much money right away off the get-go. I should have slowly averaged in, maybe put 100 at first, maybe another 100 and another 100. But no, I decided to just straight up dump in like $800, and because of the earnings, it dropped down by like 9 or 10%. So right now we're just holding it. Hopefully it does bounce back up, and I might decrease my position size on it then. Once we get to break even, I might maybe get rid of half of it. So we'll have maybe one share of Illumina. Because this is my biggest holding in my portfolio right now, and I definitely am not seeing this as like the biggest potential company right now in my portfolio as well. So that's definitely not really supposed to be there. So I'm hoping it bounces back in a mildly short amount of time, and so we can get rid of part of it and still keep a decent amount for the growth in the future. NextAir Energy is also treating us well, hasn't moved a lot in the last week. So has Skyworks, also doing well. Uber, we already went over, not really looking to hold it anymore, just trying to get rid of it. AMD, absolutely skyrocketing, even though the last week hasn't been too eventful. The last month definitely has been up over 50%. I don't know, I don't think I've done enough research on this company to invest more into it. I just bought into it for fun, and I guess it was a pretty fun profit as well to make off of it. But I would need to do more research before getting to this company and deciding if I want to buy more shares. So that's with AMD. We got CCL. I'm just planning on holding this, adding more, maybe like 1 to 2 shares just to get it up to maybe 200, how much I have in the stock. But I think it's just a long-term play, like 2-3 years, maybe even 4. It's going to probably bounce back up. Hopefully, it's going to bounce back up to where it was at before. I'm not a financial advisor, of course, so make sure to do your own research. But I just personally see that it has a potential to possibly get up to that area where it was before and maybe double, triple your money with that. So yeah, that's what we got with CCL. We also have Amazon, which we have like $5 in, no big deal. Revolve released its earnings, and sadly, I did not buy more of this. We're currently up 36% in it, and because of its earnings, it spiked like 20+%. And boy, do I wish I bought more, but it's fine. You can't be emotional in the stock market, so whatever we have, I'm happy that we at least had one share and we were able to make $6 off of it. Hey, it's always something. But if I see this company on a dip, sometime that I can buy this stock at a slightly lower price, then I'll probably add some more to my position. Maybe make this a $150 to $200 position in my portfolio on Robinhood. I see a lot of growth ahead for this company, but right now, I feel like the earnings have caused it to go up a little too high for my liking. And then here we've got a little bit of gold. I think I bought like one share in the last week because it dipped down a little bit. Honestly, just buying this stock to see how gold will perform over the long term. Obviously, it's going to keep its value, and if something, it's going to increase. And I just kind of wanted to compare how gold will perform compared to the stock market, because I mean, gold has been rising a decent amount. And last year, it's up 28% compared to the SPY. I mean, obviously, we had a recession. Well, not a recession. We had the COVID stuff going on. But we have here up 18%, while gold is up IAU, I think that's the ticker symbol. Gold is up over 28%, so over 10% more. In the 5-year chart, 76%, while the stock market, let's see, is up 60%. So hey, sometimes maybe gold does better than the stock market, and why not be a part of it? So that's why I'm putting in maybe just $100 into gold, seeing how it'll perform compared to the stock market. And here we got Lemonade. I think they also released their earnings this week. And this stock is an insurance company. It's more of that modern, higher tech company for insurance. I see it has a lot of potential in the future, but it's not something, it's a stock that recently IPO'd, like pretty dang recently. So I don't know if I want to invest a large chunk of money into it yet. But right now, I'm more than happy with the position I have. I don't care that I'm down 4.2%. This stock is moving up that much or down that much in a single day. So I'm just planning on buying and holding the stock, seeing where it goes from there. And then the final stock that we got in our portfolio is VUG. And for those who are familiar with my portfolio and have been watching my videos previously, I used to have VOO, like a small position, like $37 I think it was, in VOO. But then I take a look and there's an ETF. I found this ETF many months ago, but I decided to take action and invest into it recently, this week. I see that VOO is doing pretty well. And if you incorporate their dividends, yeah, they're doing pretty well. They're growing just like the stock market is, tracking the stock market. But I take a look at VUG, which is a growth ETF for Vanguard, and it has done significantly better than VOO. So if we take a look at VOO, this one's up 38%. VOO is only up 18% in the last year. And do what you want, say that the dividend's bigger, which it is by like 1%, but that only brings you up to like 19% in the last year. But on the other hand, VUG, let's see in the 5 years. In the last 5 years, it's up 61%, while VUG is up 100%. And so you can see that VUG has a slight edge. By slight, I mean a pretty decent edge on just market gains, capital gains. If you invest into the stock, that one has slightly bigger dividends. So this one has 0.7, so almost exactly 1% higher of a dividend yield. But for someone like me, in my opinion, I prefer to buy stocks more for growth, and then whatever dividends I get, that's just a bonus, and I reinvest it back into my position. But I'm looking to just maybe, I was kind of an impulse buy, I have to admit. I don't know why I bought this, I just kind of did, because I sold my VOO, and I wanted to have something that tracks the overall stock market. So whenever, for example, I check my Robinhood app, I see from this stock how the market is performing, and then I see how my portfolio is performing compared to that. But yeah, don't know what I did with this. I don't know what I'm going to do with it. So maybe not the smartest investing move, but hey, sometimes you got to surprise yourself and do some random things. And last of all, we got some Bitcoin. Our Bitcoin's doing well. I definitely can't complain. We're up around $150 or 32% on it. Just looking to hold whatever I have now and follow the journey with Bitcoin. So that's how our portfolio has been doing over the last week. If you guys enjoyed the video, make sure to smash that like button below. Thank you guys all so much for watching, and I hope you guys have a great rest of your day.